Good morning, it's Carlo Carpino from TMG, the Mortgage Group. Today we have Sandra Porter back from CIBC FirstLine. She's my business development manager. How you doing, Sandra?
I'm very good, Carlo. Thank you.
Welcome back. Yeah.
Thank you for having me again.
Today we're going to talk about one of the feature products that CIBC FirstLine has. It's called the Matrix Mortgage, and Sandra's going to explain it a little bit.
Okay. So we're going to talk about the Matrix product today.
Nice new brochure, by the way.
The Matrix product, what it is, it's a combination of a mortgage and a line of credit. So you could do two separate mortgage combinations with a line. So you could do a fixed mortgage, 2 to 10 years term, and a line of credit. Or you could do one of our variable mortgages and a line of credit.
And this is up to 80% of the value.
Up to 80% loan to value. Now the good thing is you can do any dollar combination with respect to the line and the mortgage portion once it adds up to the 80% loan to value. So any dollar combination for each one. So there's no specific amount for the line, there's no specific amount for the mortgage portion.
So on a $100,000 mortgage, total mortgage, or let's say the value is $100,000 on the house, we can do up to $80,000 of a combination of fixed and line of credit.
Absolutely.
So we can have a $75,000 fixed portion and a $5,000 line of credit.
Absolutely.
One of the nice things is we can use GBS on this, which means it's market value assessment sort of thing. So,
so once we get the value there, then you won't require a full appraisal.
Perfect.
Okay. It's registered as one charge as well. That's one of the unique features of this product. So it's not registered as a collateral mortgage.
So the line of credit doesn't show up on your credit bureau.
Absolutely. Absolutely. So that's a super unique feature on this product. It's registered as one charge. It's convertible. So the client, if they have a balance on their line of credit, and at any time if they want to transfer that balance to the mortgage portion, they can do so and still keep the line of credit open.
Perfect. And going back to about being not being a chattel registration on title, that's important because if you're transferring the mortgage, you can do that with this. Where if there's certain banks,
if it's a collateral mortgage, it's not transferable.
Right.
So that's the difference between having it as a first charge as opposed to a collateral mortgage.
Right.
So it's fully transferable.
What are the rates like? Are they?
The rates are standard. A mortgage rate, so there's no difference in the rates. Once the client meets the qualification guidelines, minimum beacon requirement on this product is 580, which is really great.
Right.
You could use it in combination with any of our equity or stated income programs as well.
Oh, good. Yeah, it sounds like a great product, and I know a lot of people that are using this specifically for the Smith maneuver, right?
Absolutely. It was developed with this product in mind as well because based on the fact that you could do pre-authorized debits directly from the line into the client's account of choice, so that their investment advisors could have access to these funds. So that's a super unique feature of this product.
And you pay in this on a monthly basis, whether your fixed portion is paid weekly, bi-weekly, monthly. The line of credit portion is billed separately.
It's
correct?
paid monthly and it's interest only. Just so you're aware of that as well. And at any time, the unique feature about this product is at any time you could choose to lock in the fixed. If it's a variable mortgage, you could lock into a fixed mortgage 3 years or greater without any penalty.
Oh, perfect. Now we can amortize this up to.
The maximum amortization on this is 35 years, which is great as well.
Right. And obviously it's completely open on the line of credit side.
On the line of credit.
And if we're discharging the mortgage on the fixed portion, it's usually, if it's a variable, I guess it's just 3 months interest. If
it's a variable, it's 3 months interest, and if it's a fixed rate mortgage, it's 3 months interest or interest differential.
One of the great features of the Matrix Mortgage is the readvanceability of the line of credit.
Absolutely.
Right? How does that work? So
absolutely. So the way that works, Carlo, is every time that you pay down the mortgage portion of the line of credit, your line of credit limit increases.
Right.
And this is a great feature because it's actually readvancing more funds. It's making more funds available to your clients for investing or for paying out other debts without them having to reapply for the mortgage.
Perfect.
Another great feature that I should add is that the mortgage is fully portable. So providing that there's a firm sale on the existing current mortgage property, and there's a sale happening within 90 days of the purchase property, the mortgage would qualify as a port.
Perfect. So then they can transfer it. No, they do have to qualify again.
Absolutely.
But
Absolutely.
transfer, no penalties involved.
Absolutely.
And even if we have to increase it, right?
Absolutely. So once the sale is happening within 90 days of the purchase, the mortgage would be fully portable.
Oh, perfect. Now, what I'm going to do is also post some of the features on the website. Maybe do a link or
sure, absolutely.
And maybe make that nice brochure available.
Brochure and have it available to your clients as well, so they can look at all the great features
That's a
of
good
this
idea.
product. So another great feature as well is if you have clients that are currently in a mortgage and they want to add a line of credit, this is the product for them. The rate is at prime, so if they have higher interest paying debts that they have, they can use the line of credit to pay out these debts.
Right.
And the line of credit is only at prime. The payment is interest only monthly.
Perfect. And that happens automatically, right? It's not like you have to write a check every month to pay that interest. I think they deduct that interest cost out of your account.
Yes, absolutely. Absolutely. So you could set up for the pre-authorized payments directly from your bank account.
Perfect. And yeah, I think that's one of the best products that CIBC has right now. Very competitive rates. But it's the whole package that's really important, the advanceability of the mortgage, and there's not a lot of companies out there that have this kind of product.
Absolutely. I totally agree.
Well, thanks so much, Sandra, for coming by again. And
thank you so much. It's a pleasure being here again.
Great.